Good morning, everyone, and welcome to your Daily 5. I'm Leslie Jouflas of TradingLiveOnline.com, and I'd like to thank StockCharts for inviting me back today to host this segment. And today we are going to be talking about FOMC trading tendencies, and this is primarily for intraday traders. And we're going to be looking at some characteristics around the FOMC announcement days, the meetings and announcement days that you might be able to work into your intraday trading plans. So let's start with a chart back from the June 9th and 10th 2020 meeting. And what we see here on this chart is that we have sort of a ranging environment starting over on the left. We start to see some upward bias, which is one of the tendencies around FOMC days. Generally, a couple days or day before the FOMC meetings, we'll start to see the market start to move upwards. Now, if we move over where we have day one, we can see that on that particular trading day, remember we're looking at more intraday here, we can see that the market from the previous day opened down, but then did start to drift upwards during that day. The next day, the market again drifted down, but then started an upward bias towards where the meeting announcements come out. Another thing that you'll tend to see is the market become very quiet about an hour and a half to 2 hours before the actual announcement comes out. And so here we can really see that on this chart where you can see the candles becoming very, very neutral. One thing that traders may or may not know is that following the meeting or the announcement, the prices tend to get very sharp moves in one direction and then reverse into the next direction. So the example here is this is where the announcement was. It was at 2 p.m. Eastern Standard Time. The market had a sharp move to the upside, reversed, and then a move back down from there. And then up until the close, it was just a range trading where the market came up and back down. But we're going to look at an instance where the market can also trend in the last portion of the day following the announcement. Here, I'd like you to also notice that the days following the announcement, usually around one trading day to maybe even up to 4 trading days, maybe 5, but usually within the next couple of days, we'll see a larger move in one direction or another following the announcement. So after this meeting on June 10th announcement, the market had a large gap to the downside, and then intraday it was a trending day to the downside. Now, I wanted to also show you here, this is a chart from actually 2010, so we're going back 10 years on this, and the characteristics have not changed a lot. I've been keeping charts of FOMC days since 2004. I think I've got every chart and the days following the announcement and have studied this quite a bit. So again, we see some of the upward bias coming into the announcement day, a little bit of a down drift. You see the market gets very, very quiet, and then what we see here is the volatility in one direction, reversal to the next direction. In this instance, the market, instead of ranging into the close, the market is trending into the close. So that can be a variation on this that traders should be aware of. And then we have the gap up open the next day and an upward trending type move. So again, this was 10 years ago and very, very similar characteristics. So now let's move to the current FOMC announcement that we just had yesterday. It was a 2-day meeting. The market has been in the range. I just did a segment for your daily 5 on July 28th, and I talked about this range forming and showed some of the patterns within that range and some other areas to be watching now. But within this range now, we see the upward bias starting to happen the day before the meeting into the meeting day. The market has a gap up, and then it becomes very quiet prior to the announcement. Here's where the announcement came out, and within this one bar on the intraday chart, you have the up move and the down move, and then some just sort of range trading with a bit of an upward bias into the close. But again, I've got this like this area right here. This is 3190 on the S&P 500, and this is support area to be keeping an eye on that the market is testing today. So let's see some more charts. I'm going to show you a chart updated just this morning, but I want to show you first this pattern. This is called a butterfly buy pattern, and this was a pattern that formed and completed just before the announcement day in the overnight market. So if you know that upward bias, then you can be looking for particular setups that can help you enter and do short-term trading around these tendencies. So as you can see, this one formed right just above that 3,200 level, down at that lower support area that I've had marked in now for a little while. Okay, so now we're looking at the current chart again. These are all intraday charts this time around. Here we had within this range a butterfly sell pattern. The prices drifted down to the lower end. In here is where the other buy pattern occurred, and then we have the upward move. And when the announcement came out here, we came back up with the upward movement after the announcement and completed now an ABCD sell pattern, which has brought us down this morning down towards the lower end of the range. So I just wanted to show you these two charts together. The right side, we're looking at, again, an intraday chart, but we can see where the gap areas are on this, and because it does not have the overnight trading on it. And we can see here that we have the range that formed. We had a upward bias. The market kind of drifted to the upside. It became very quiet prior to the announcement. Move in one direction, reverses, and then the range trading. So here, like the other examples we looked at in the very beginning of our segment today, here we have the large gap down open, and the prices have come all the way down to the lower end of this support area right down here now, and we'll see if this support holds. But here again, if we take a look at the left side, we can see the patterns. And you might be wondering, well, how come I can't see those patterns on this chart? Well, I use tick charts with the intraday and overnight data on them, and that allows me to see all of the swings. So I can see some of these patterns that form on these types of charts, and then on these charts without the overnight data, I can see the gap areas, and I can see sort of different price tendencies on this. So again, some of the things that we want to be looking for around FOMC is we want to be looking for opportunities to capture that upward bias, and then understand that after the trading, after the announcement is out, the trading may be very volatile. We'll get either ranging into the close, or you may get a strong trend, but expect anywhere from, again, 1 to 5 days, a strong move in either direction following the actual announcement. So I hope you learned some interesting tendencies today, and thank you for joining me. And I will see you on the next episode of your Daily 5.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're going to bring you daily content from an incredible collection of technical analysts and financial experts.